Every night across America, more than 45 million Americans go to sleep without health insurance coverage. They do so in fear of a nightmare scenario of developing a catastrophic illness and being unable to pay for treatment. It is this fear that has caused many hardworking Americans who are not covered by an employer or government-sponsored health care plan to purchase individual health insurance policies. But those Americans fortunate enough to afford individual health care coverage are not immune from the nightmare scenario. That's because of a practice called health insurance rescission. Here's what happened to one victim of rescission. Otto Raditz was a 59-year-old restaurant owner from Illinois who was diagnosed with an aggressive form of non-Hodgkin lymphoma, a cancer of the immune system. He underwent intensive chemotherapy and was told that he had to have a stem cell transplant in order to survive. With coverage provided by his individual insurance policy, he was scheduled to have the procedure performed. But then his insurance company suddenly told him it was going to cancel his insurance coverage. Otto could not pay for the transplant without health insurance. The stem cell transplant surgery was canceled. The insurance company told him that it found when he applied for his insurance, he had not told the company about a test that had shown that he might have gallstones and an aneurysm or weakness of the blood vessel wall. In fact, Otto's doctor had never told him about these test results. He didn't have any symptoms, and these conditions did not have anything to do with his cancer. But the insurance company was going to rescind his policy, effectively tearing up the contract as if it never happened, and it would not pay for his stem cell transplant. Otto made a desperate plea to the Illinois Attorney General's office seeking help to get his insurance company to reverse its decision. He told them, and I quote, "I was diagnosed with non-Hodgkin's lymphoma. It's a matter of extreme urgency that I receive my transplant in 3 weeks. This is an urgent matter. Please help me so I can have my transplant scheduled. Any delay could threaten my life." The Illinois Attorney General's office launched an investigation, confirmed that Otto's doctor had never even told him about the test findings, and sent 2 letters to press the insurance company to reinstate his policy. The company relented, and Otto received his stem cell transplant. He was able to live 3 more years before passing away earlier this year. Otto was one of the lucky ones. This committee has concluded an investigation into the practice of health insurance rescission, and the results are alarming. Over the past 5 years, almost 20,000 individuals, insurance policy holders, have had their policies rescinded by 3 insurance companies who will testify today: Assurant, UnitedHealth Group, and WellPoint. From a review of case files, the committee has identified a variety of abuses by insurance companies, including conducting an investigation with an eye toward rescission in every case in which a policyholder submits a claim relating to leukemia, breast cancer, or any of a list of 1,400 serious or costly medical conditions. Rescinding policies based on an alleged failure to disclose a health condition entirely unrelated to the policyholder's current medical problem. Rescinding policies based on policyholders' failure to disclose a medical condition that their doctors never told them about. Rescinding policies based on innocent mistakes by policyholders in their applications. And rescinding coverage for all rescinding coverage for all members of a family based on a failure to disclose medical condition of one family member. The investigation has also found that at least one insurance company, WellPoint, evaluated employee performance based, in part, on the amount of money its employees saved the company through retroactive rescissions of health insurance policies. According to documents obtained by the committee, one WellPoint official was awarded a perfect score of 5 for exceptional performance based on having saved the company nearly $10 million through rescissions. These practices reveal that when an insurance company receives a claim for an expensive, life-saving treatment, some of them will look for a way, anyway, to avoid having to pay for it. This is eerily similar to what we found last year in our investigation of long-term care health insurance policies, where unscrupulous salespeople would sell policies to seniors, then change or revoke the policies once the enrollee was locked into a plan and making payments. The companies who engage in these rescission practices argue that they are entirely legal, and to an extent they are. But that goes against the whole point of insurance. When times are good, the insurance company is happy to sign you up and take your money in the form of premiums. But when times are bad and you're afflicted with cancer or some other life-threatening disease, it is supposed to honor its commitment and stand with you in your time of need. Instead, some of these companies use a technicality to justify breaking its promise at a time when patients are too weak to fight back. I'd also like to mention and compliment the staff on their supplemental information regarding the individual health insurance market. It's attached to my opening statement and will be part of the record. Today, we will hear from victims of this practice of rescissions, as well as 3 of the leading companies that engage in it. We hope to learn more about this problem so that we, in Congress, perhaps through a comprehensive national health care reform bill, can curb abuses and put an end to this unconscionable practice once and for all.